Welcome back. In our top business story, business professionals in Dubai are optimistic about the Emirates' improving economic outlook. That's according to a recent survey released by the Department of Economic Development. The business survey, which covered 500 onshore and free zone companies in Dubai for the second quarter of the year, monitored the business sentiment based on revenues, retail prices, sales volumes, profits, and number of newly hired employees. The report revealed that sales were stable in Q2, and looking ahead, many expansion plans are in the pipeline, with the majority of firms looking to increase their workforce. His Excellency Sami Al-Kamzi, Director General of the Department of Economic Development, stated that the results of the survey shows Dubai's competitive status and its continuous growth. Abu Dhabi's economy grew nearly 16% last year. That's according to the Statistics Center Abu Dhabi. The report, which was published on Tuesday, read that a number of indicators signal the capital's economy has overcome the hurdles of the global financial downturn. Abu Dhabi's GDP now stands at 620 billion dirhams, with oil contributing for nearly half of the growth last year. Abu Dhabi is trying to reduce its dependence on crude oil. It previously laid out plans to further diversify its economy, building upon non-oil sources of funding. Mashreq Bank, Dubai's second biggest lender by market value, reported a 22% increase in its net profit for the first half of this year to 552 million dirhams. Operating income stood at 2.2 billion dirhams. One reason being that provisions for loan losses fell by 29% to 637 million dirhams, the bank said in a statement to the DFM today. His Excellency Abdul Aziz Al Ghurair, CEO of the company, said that the markets in the UAE have witnessed a slow but steady recovery, which have resulted in the rise in profits. And also Emaar Properties, the UAE's largest developer and a heavyweight on the DFM stock market, reported its second quarter results on Tuesday. Net profit fell 69% to 250 million dirhams, mainly because Emaar handed over fewer homes than a year ago. The share ended down 0.7%. And also the two UAE stock markets, the DFM and ADX, ended down, as did the majority of the GCC's benchmarks. And in our world business news, President Barack Obama's Democrats and their Republican rivals are further apart than ever on how to reduce the U.S. budget deficit, very much to the concern of Wall Street and other global markets, which start bracing themselves for a U.S. default and credit downgrade. By Tuesday next week, August 2nd, the two political parties must find a solution. However, so far, they pursue competing budget plans that appear to have little chance of winning broad congressional approval. With no compromise being in sight to raise the nation's $14.3 trillion debt ceiling to avert a default, Wall Street fears a global financial chaos. Also because the rating agencies threaten to cut America's top-notch AAA credit rating if it doesn't come up with a plan to control its long-term deficit. Should the U.S. lose its top credit rating, analysts say that could cost the country $100 billion in additional interest and lure the economy back into recession.
I think I made it pretty clear last night. The president's looking for a blank check. We have a bill that is a reasonable approach, negotiated with the Senate leadership, that really is common sense. There's more cuts in spending than you have an increase in the debt limit. It has real caps and a real process for cutting spending before the end of this year. And it provides for, I think, the best effort to get a balanced budget amendment enacted into the Constitution.
Meanwhile, Britain will stick to its deficit-cutting economic plans despite modest economic growth, Prime Minister David Cameron and Finance Minister George Osborne both said on Tuesday. They were responding to Britain's GDP figures in the second quarter, which showed a modest 0.2% rise compared to Q1. That takes the annual growth rate to 0.7%, the lowest since the first quarter of 2010. Britain's opposition Labour Party, as well as business lobbying groups, have called for emergency tax cuts to boost the economy. In focus is also the VAT sales tax, which they demand should be raised from 17.5% to 20% at the beginning of next year to help cut the UK budget deficit. Last year, it stood at over £142 billion, or slightly above 10% of GDP.
This year, Britain's budget deficit is bigger than Greece's. The reason we're not in the mess that Greece is in is because we have a plan, and because while interest rates in Greece are over 10%, ours are around 3%, because the government has a plan to get on top of our debts. The world knows that, business knows that, investors know that.
India's central bank, the Reserve Bank of India, raised interest rates by an unexpected 50 basis points on Tuesday, stepping up its fight against persistently high inflation. The RBI surprised economists with a larger than expected half-point boost in its repo rate, the rate at which it lends to banks, to now 8%. RBI Governor Durvuri Subbarao said that stronger action was needed to cool inflation and avoid a hard landing of India's economy, Asia's third largest. Annual inflation currently stands at above 9% in India. The central bank will therefore add another half-point to the benchmark rate by the end of 2011, economists predict. India's main stock index, the Sensex, lost only marginally by 0.5% today.
First, the cumulative impact of past actions on demand will be reinforced. Second, the credibility of the commitment to monetary policy, to controlling inflation, and thereby to keeping medium-term inflation expectations anchored will be maintained. And third, the policy actions will reinforce the point that in the absence of complementary policy responses on both demand and supply sides, stronger monetary policy actions are required.
Before we go, here's a quick overview of the oil and currency markets, and after that we have the day's sports news for you.